Hello everyone. Today we are taking a closer look at the euro and the eurozone economy as we step into the second half of 2025. Growth is slowing, but the currency still has some solid support from the policy divergence and the domestic demand. Let's break it down. The eurozone economy grew just by 0.2% in the last quarter and 1.5% year on year. Not very strong, but what's keeping the economy steady is the employment. Jobs are still growing and that's supporting the household spending. The real weak spot is trade. The latest numbers show that the trade surplus fell sharply to 7 billion euros against the market expectation of 18.1 billion euros. Exports they are barely moving and imports are climbing faster, partly because of those higher US tariffs that is cutting into the growth of the eurozone. Now on the outlook part, the ECB expects growth to stay modest at about 0.9% this year and pick up slightly in 2027. Inflation is easing but still close to the target. Importantly, markets now believe in a higher for longer rate path from the ECB, while Fed is expected to cut rates twice this year. This policy gap remains supportive of the euro. Technically, if we see the charts, the Euro USD pair it is still in an uptrend as indicated by the upward rising linear regression channel, the blue line. However, the previous peak of 1.1830 has not been broken yet, and a short-term downward moving trend line, the white line that we can see on the chart, connecting the June and the July peaks comes around 1.1675. Now this region between 1.1675 and 1.1830 will act as a resistance. Breakout of the 1.1830 levels can lead to further upside provided that the prices remain within the linear regression channel. For exporters, levels above 102.50 along with 4 to 4.5% annualized premiums, it provides an attractive opportunity to gradually increase the hedge ratios. But we should not overhedge and stay balanced. For importers, it's better to use buyer's credit for near-term payments rather than hedging at all-time highs. If the euro corrects by 2 to 3%, that will provide us a better opportunity to hedge for the repayments of the buyer's credit. So overall, the growth is soft, the trade is under pressure, but euro still has support from the policy divergence. Exporters should take advantage of the strength while importers should stay patient. Thanks for watching and stay tuned for more updates.